Hey, Dr. Tom Carr here of drstoxx.com. Just a quick reminder, you've got 4 days left to use the discount code FREE TRIAL, all one word. When you sign up for any one of our monthly subscriptions, you're going to get 30 days free of charge. You can cancel at any time, no questions asked. All right, we're going to look tonight at the S&P 500 and determine where the next big move is likely to come and which direction. I have an inclination that it's going to be trailing off to the downside, but let's take a look at the chart first. This is the S&P 500 here as determined by the Spider ETF, and we can see that it's clearly in a strong uptrend over the long term. This chart goes back a couple of years. You can always tell if it's an uptrend over a given time period by seeing where the chart is down here on the left-hand side. It's down in the low left-hand corner. And on the right side, it's in the upper right-hand corner. So that's clearly a nice 45-degree angle. That's a sustainable uptrend. The trend overall is up, but we're in a very strange place right now. Let's zoom in on the market action for the last several weeks. And you can see that we're in what looks like kind of a topping formation here. Almost looks something like a very flattened out head and shoulders top. That's not a favorite pattern of mine, and I don't put a lot of stock into that particular read. But let me just show you what's been going on. This big gap down here, it took place back in late May, or late June rather, is the Brexit vote. And it was such a surprise when Britain decided to leave the EU. And all indications were from the polls that it was going to go the opposite direction. Well, that surprised the market. Market hates surprises. It sold off very sharply. As you can see down here, printed a low below the 200-day moving average. And then it was just straight up from there. That was a perfect buying opportunity. Investors have been looking for a good buying opportunity, and they took advantage of it. Now, this first period of consolidation was very much expected. You always expect a period of consolidation following a sharp uptrend like that. And that's exactly what we got. We got, for about a period of a month, a better part of a month, we got a sideways trading action, which was not a lot of fun, having had a lot of fun during that uptrend. But that's completely expected, totally normal, nothing out of the ordinary. Price consolidation after a strong run. Higher highs are expected on breakout. Well, we got the breakout here in mid-August, and I expected, all traders expected the trend to continue. However, we didn't get that. Instead, we got another sideways period of consolidation, and this one was just about as exciting as the first one. And only it was at a little higher level, but again, this was, 1, 2, 3, 4 weeks, 4.5 weeks of sideways price containment, extremely narrow range. In fact, to find two ranges as narrow as this for as long as they extended here, you'd have to go back all the way to 1929, if you can imagine that. Now, we all know what happened at the end of 1929, so hopefully this is not a precursor of that. But then we got this big sharp downside here. The Dow sold off 400 points in a day. It was the second worst day of the Dow's trading this year, and mainly on rate hike fears, among other things. And that looked like we were going to be falling out into a downtrend, but yet again, we got another sideways trend. It looks like this. Okay, so here we have 3 periods of sideways trading, tight range-bound trading, and all up at all-time highs, just under all-time highs. In fact, we're within 3%, less than 3% of setting a new all-time high. But the concerning point of this consolidation on the right-hand side is that, first of all, we have not recovered back to the high set in the middle period. Secondly, all the trading for the last 5 weeks has been under the 50-period moving average. That's not a good sign. That's not a good sign in an uptrend. In an uptrend, you do expect to find pullbacks to the 50-period moving average. Maybe it'll dip below for a couple of days, but you don't expect it to remain below the 50-period moving average for this extended length of time. We also have the 50-period moving average starting to down slope, which is not a good sign either. In fact, this little right shoulder here reminds me somewhat of another session where we did have some sideways range-bound action, and toward the end of that range-bound period, we had quite a bit of trading underneath the 50-period moving average before it finally resolved to the downside in a very sharp sell-off right there. I fear that we're heading towards that. Now, the election, of course, is the big issue that's been keeping traders in check and on the sidelines for the most part. And so until that gets resolved on November 8th, assuming it is resolved on November 8th, we will likely continue to see this sort of choppy, tight range action continue. What could be the catalyst for that sharp downside fall that I'm worried is going to happen is the election itself, either an unexpected result or perhaps a contested election which drags out in the courts for several days, if not weeks. We don't want to see that happen, of course. That would not be good for anybody. But that could be the issue that causes the downside sell-off. We could also be witnessing something like a selling on the news of the election itself. Everything goes smoothly. The election comes out the way most people think it's going to come out, and we get a sell-off regardless because everyone was expecting the market to go up, and whenever everyone expects the market to go up, it usually goes down. That's just how it works. All right, so all that is to say that it's not looking real good as far as I'm concerned. Going forward for the S&P 500, I don't expect a huge sell-off, but I do expect we'll see the 200-day moving average down here tested at some point in the next few weeks. Now, I hope I'm wrong because I prefer to trade on the long side than on the short side. And of course, I have a lot of long-term positions that will only benefit if the market goes up. But I just want to put that out there as a possible caveat. A couple of little mini trend lines that you want to look out for. Within this sideways consolidation, we do have these two little ascending triangles, which are generally considered to be kind of bullish, but they're within a downtrending channel and they're underneath the 50-period moving average. And so they could be setting up for a break to the downside. Just keep your eyes peeled for any break of this slanted line here. And then, of course, the big break would come under the support line. Real quickly, I do want to show you one stock that looks quite good on the bullish side, and that is U.S. Steel, which is obviously a steel company, and I'm surprised that this is doing as well as it has been. I've been bearish U.S. Steel and the steel sector in general for a lot of macro reasons and fundamental reasons and so on, but the chart itself looked pretty bearish. I was expecting this left shoulder, middle head, right shoulder, although it's not my favorite pattern, but it can predict tops, and it looked like it might have been a top there. But the 200-period moving average has been working its magic, and it has held as support, and we've had this nice little run, this very sharp run, in the last few days. Now, earnings are coming up next week, so that's always a wild card, but I am keeping my eye on this resistance line right across here. We've got the little bull flag forming underneath that line off of the push off the 200-day moving average. And if that breaks to the upside, let's say over about 2050, 2040 or so, I suspect you're going to see another sharp rally. And this could get as high as I need my reading glasses, 2685 or so, which is where that gap is. So that would be a nice 6-point move on a $20 stock, which would be nice. Just keep your eyes on that. I'm not saying buy it right here, but if it does break to the upside and maybe after earnings it might do that, then this would be a nice little swing trade. All right, God bless everybody. See you on the trading floor. Bye now.